What's going on, you guys? It's your boy Abel, and I'm back with another banger. And with this banger today, family, that I'm so excited to actually go ahead and provide to you guys, it's going to really break down the triangle of trading success, family, because there's three main components that you need to actually master in order for you to actually become a profitable trader, right? A long-term profitable trader, guys. Now, those three aspects, right, are strategy. You have to have a proven strategy, right? The second one is risk management. You have to have a high level of understanding of risk management and why it's important to never over leverage and follow a set of rules for risk management. And the third one has to do with your trading psychology and your discipline, right, family? If you do not master these three things, you will never be a profitable trader. And I'm not saying you can master one, you have to master all three. And that's what I'm going to get into today, because I'm going to break down the key components of each of those so that you can be prepared, right, in this trading career that you're about to start or be a part of right now, family. Now, before we even get into that, I need you guys to do me a couple solids, right? You guys know I need help growing this channel, and you guys are the ones that can help me, family. So if you guys are appreciative of the value that I'm giving, right, then I want you guys to go ahead and like this video. Go ahead and drop a comment down below on this video, and also make sure to subscribe to the channel, guys, because I am on the road to 20K right now, right? I think we're at 17,000 right now, which is cool, right? But I want to get 20K, guys, as soon as possible. And I know what I can do it with your guys' help by you guys simply showing a little bit of love and liking the video, commenting on this video, and also subscribing to the channel itself. Now, let's go ahead and get into this. Let's go. All right, guys, so now we're here on my computer, on my desktop, and I really want to go ahead and break down, right, the triangle of trading success for you guys, right? And it's very simple, guys, right? There's three main components that you guys have to master, right, in order for you to actually become a profitable trader, right? Your job right now, your intentions, right, is to get into the middle of the triangle, right? Your job is to get into the middle of the triangle. But before you can do that, you have to, again, understand the strategy, risk management, and you also have to understand trading psychology and discipline. Okay, now let's go ahead and let's get into, right, exactly what I want to break down today. Right, let's really start off, guys, with the S, right, the strategy aspect, right, of this entire thing here, right? Because this is going to be, again, very, very important for you to understand. Right now, when it comes to your strategy, guys, right, you need to make sure that, for one, whatever strategy you decide to go with, that you are back testing that strategy. Right? Back testing, guys. What is back testing? Back testing is when you go ahead and utilize a tool like the replay tool that TradingView offers, right? It allows you to go back into time, right? And you can actually go ahead while utilizing that replay tool to actually find setups that you can play in real time, right? Yes, it's obviously replay, but you can fast forward it, right, and actually play it out to see if you're actually looking at your strategy and looking at the markets the correct way. So the first thing you need to do, guys, once you guys are finding a strategy that you're interested in, is to back test that strategy, right? That's the first thing you need to do. Right now, for every strategy, guys, there's going to be key components, right, that you also need to have, right? The first key component, right, of your strategy, right, I'm gonna break this down like this, right? CEST, okay? Strategy, CEST. Okay, now let's go ahead and break down the first thing of your strategy, right, is going to be your conditions, right? Conditions stands for the C and CEST, right? Your conditions, right, is the reasons why you like a setup, right? The reasons why you like a setup. Okay, this is very important to understand, guys, right? Because if you're just in the markets, guys, placing trades randomly, then you cannot get upset if you're not getting the results that you're after, right? When you are actually looking at your system or your strategy, right, you're going to have a set reasons, right, as to why you're even looking at that trade itself, why you're even considering that trade in itself, right? The reasons why you like a setup, right? That's your conditions, right? The next aspect, which is the E, right, is your entries, right? The reasons for why you actually entered the trade. You entered the trade, right? Like, what confirmations did you actually get, right? What is the purpose of you pressing buy or sell in the markets, right? You need to have an actual rules, right? An actual rule-based strategy around just entering the trade itself, right? Like just for me, guys, a lot of the reasons why I enter trades is because of where we're actually entering at in terms of our trading range, right? And there's also things like I look for like break and retest, right? I look for captures of liquidity, right? There's so many different reasons as to why I personally enter a trade. You have to figure out what your reason for entering those trades are, right? What confirmations did you get? Did you get a break and retest, right? Did you get a rejection off of a fib level, right? Are you using trend lines, support and resistance levels, right? Rejections of certain key levels for it. It's up to you. Whatever it is, you need to write that down, right? And be very, 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 very definitive on what that truly is. Right now, the next thing, guys, is your S, right? And your S stands for your stops, right? What is your max risk for that trade, right? How much are you willing to risk for that trade itself? What are your rules for this, right? For me, I don't risk no more than 1 or 2% on any given trade, any given setup, right? I don't risk that, guys, because again, I know for a fact we are in a lane, right? We're learning a skill set, right? We're losing is actually a part of it, right? So it's no doubt that you're going to take losses in trading, right? You can't avoid the losses. They're going to happen, right? But are you able to control how much you're losing, right? That's one of the biggest key factors here, right? Most people, the reason why they don't get the results they're after is because they don't have a actual rules, right? Actual rules based or behind as to why they're actually placing their stop losses in those set places, right? Again, I don't risk no more than 1 or 2%. That's my rule. Right. So if I find a setup, I need to make sure that I'm deciding, right? I'm deciding on my stop loss, not based on how far it is from my entry, but I'm basing it off of my max amount risk, which is 1 to 2%. All right. I hope you guys just picked up that nugget. All right. Now let's get into the next one, guys. And that is T, right? And T stands for your targets, right? Your targets, right? Which is an area, right? Where you will look to take profit, right? Where is this area? Why are you specifically picking that point in the market to close out your trade, right? Is it because that's another significant level of structure, right? Is it because that's a supply and demand zone, right? Is it because you have some certain indicators like moving averages at those areas, right? What is that specific reason that you want to close out of your trade at that area, right? You need to be able to break this down as well. Right. And guys, as you guys continue to actually get better with your strategy and you guys actually find conditions that you like to have met, right? Then you actually understand your entries, right? You know why you want to enter a trade. You know where your stops are going to go. You know where your target's going to go. Right now, you want to go back and continue to back test all this, right? Back testing should never stop, right? It's one of those things, guys, that we need to do consistently, right? I'm 6 years in the game now, right? Training for 6 years, and I still back test all the time, especially if it's something new or a new strategy or a new technique that I'm learning. You're damn right I'm back testing, right? Because I want to make sure that it lines up with my style of trading, guys. So again, for strategy, right, we categorize it as CEST, right? The system for strategies. And that is your conditions, right? Your entries, your stops, and your targets. If you have a strategy and you don't have any of this, then you don't have an actual strategy, right? So make sure to get on that, guys, immediately. Okay, now the next one, right? Let's go ahead and talk about risk management, right? Very, very important. One of the most important aspects of trading itself, right? Is having a really strong understanding of risk management, right? Now, I want to start off this part right here, guys, which is telling you guys a few things, right? Trading, right, or losses will happen, okay? Losses in trading will happen, right? You cannot ignore it. You can't avoid them, right? There's nobody in this world, family, that is 100% accurate. It's just not possible, right? So losses are something that is going to happen, right? So if you know that you are participating, right, in something that a loss is actually almost guaranteed to happen, which is guaranteed to happen, right, then why not actually protect your capital as much as possible, right? Why not have a strong level or a strong understanding of risk management, right? That it's just something, guys, that every trader really needs to come to terms with, right? If you truly want to see results, right? So let's actually go ahead and break down risk management, right? Because there's also 3 components to risk management, right, that we need to truly understand, right? 3 parts of risk management, right? Let's break this down. I want you guys to write all this stuff out. Remember, if you are taking these notes, guys, go ahead and take a screenshot when you're done and send it to me via Instagram, right? And I'll definitely go ahead and put you in for the running for this cash giveaway for my next video, right? Which will drop at the end of the week. All right, so 3 parts to risk management, right? Number 1, right, is your risk capital. Your total amount of capital that you're willing to risk in any speculative market. Okay, that is your risk capital, right? All the money that you put in your trading account is considered as your risk capital, right? I say this all the time as well, guys. Like, once you deposit money into your broker, that money is not yours anymore, right? Now that money is now the broker's, and they're pretty much going to give you a loan, right, and credit it into your trading account. Right now, that money comes back to you, right, and turns back to your ownership once you actually withdraw it back into your account, right? So that's why we say risk capital is everything that you deposited in there, right? You have to be comfortable, right? And you have to start using money that you're not scared to lose if you truly want to have some type of chance of actually becoming successful in this space, all right? Now, number 2, guys, right, is risk per trade. Remember what I mentioned earlier, right? I only risk a certain amount, right, of percentage, right, for every single trade that I place, right? So risk per trade is just the amount of capital or percentage you're willing to risk for every single trade, right? For every single trade you take. Okay, so again, for me, 2% max, 1 to 2% is my risk per trade. I don't care how good the setup looks, right? I don't care how confident I am in seeing where this trade is going to go. I don't care about none of that, guys, right? Because at the end of the day, the market has a mind of its own, right? We can have the absolute best setup, right? Every confirmation literally showing, and we can still take a loss, right? It is what it is. That's why you don't want to pick and choose as to when you want to be disciplined enough to follow the rules. No, guys, if you know we're supposed to only risk 1 to 2%, then make sure you're actually following that, right? If you don't follow it, then do not get upset if you continue to blow your account. All right, we're not telling you guys this just to say it. No, we're telling you guys this because it's very important. All right, and then we have overall risk exposure, guys, for the third aspect of risk reward, right? And this is the amount of exposure to risk your account will have at one given time. Okay, now what this means right here, guys, is very simple, right? When we are trading, right, and if we're risking 2% per trade, right, that's amazing, right? But what happens if we over here take 5 trades all at the same time, right? So yeah, you're risking 2% on one given trade, but if you are exposing your account to 10% potential loss, right? See, that's a big no-no, right? Because that's still technically over leveraging in this space, guys, right? So again, we cannot overexpose our accounts, right, to unnecessary risk, right? So one thing that you need to do is create a rule for yourself, right, on how much, right, exposure you're willing to risk, or show how much exposure to risk you're actually willing to, expose to your account, right? For me, I don't risk no more than 5% in any given day, any given moment, right? Which means if I'm taking trades at 2% risk and my max exposure is 5%, then I could take 2 trades at 2% and 1 trade at 1%, right? Or we could break it down at 5 trades, risking 1% a piece. But at the end of the day, I'm not going to go over, right, that 5% overall risk exposure, right? Because I don't want to overexpose my account, right? In case, right? Because this is one of those things, guys, right? This is one of those skill sets, right, in those industries where you have to think about the worst case scenario, right? What happens what if all these trades lose? Right now, if you're risking 2% on 5 trades, that's 10% of your account, 1/10 of your account lost, just like that, guys. So make sure that you are not overexposing your account to unnecessary risk as well. Again, for me, 5% risk is what I typically like to stay around, right? So that's risk management, guys. Let's go ahead and get into the last one, right? This is trading psychology, right, and discipline. Right. And this one is really not much to talk about, guys. It's very hard, right, to become a professional trader, right? It's not something that everybody can just wake up and do, right? And the reason why most people do not see the results that they're after, right, is because they lack, right, discipline, and they lack, right, their ability to control their emotions, right? Emotional control is one of the most important habits of a successful trader. Are you able to manage and control your emotions, guys, throughout the process of your trading career? Right? Most people cannot do that, right? And even if you can master and control your emotions, are you being disciplined enough to follow all of your rules, right, in order for you to actually see the results that you're after? Again, most people are not able to do that, guys, right? So if you truly want to go ahead, right, and become a profitable trader, right, you need to, for one, have a strategy, right? You have to have a strong understanding of risk management, right? But you also need to have the ability to control your emotions, right? Understanding that it is what it is, right? This market is going to get their wins, right? There's certain things, guys, that we cannot control, right? We cannot control the outcome of the trades, right? So we cannot get emotionally attached to the outcomes of these trades, especially if we're following all of our rules, right? I say this all the time, guys. There's two ways to lose in this market, right? You can lose based off your careless decision making, right? And you just being not disciplined and you're not following your rules. You take that loss, you got to just take that loss on the chin, and it is what it is. But then you could take another loss, right, where you followed all your rules, you had all the confirmation, and the market just won, right? It is what it is. That's why we have to be able to get to a point where we can control our emotions and not get attached to the outcome, right? Get attached to perfecting the strategy. Get attached to your understanding of risk management. Do not get attached to the outcome of the trades, because again, it's going to happen whether you like it or not. Losses are going to happen whether you like it or not, no matter how confident you are in that trade, right? So when it comes to trading psychology and your discipline, guys, these are just a few things that you have to absolutely master, but you have to be disciplined enough to actually follow your rules once you actually do master the psychology aspect, right? And this is the cool thing about the trading triangle success, right? You're only going to get better with the trading psychology, right, once you actually have full understanding and clarity, right? I'm talking about when you have full understanding and clarity of your strategy, right? Your trading psychology is going to get better, right? When you have a full understanding of risk management and you're actually being disciplined enough to follow it, again, your trading psychology is only going to get better, right? And the way that you manage and control your emotions will only improve once you are actually clear, right? And you understand your strategy and you understand risk management, right? That's why I really love this thing, guys, because you can't have one of these three things and become a profitable trader. It all needs to tie in, right, with each other, right? You need to have a solid strategy, right? Solid risk management, right? Solid understanding of trading psychology and discipline in order for you to actually see the results that you're actually after, right? So family, the triangle of trading success is here for you, right? Everybody can become a profitable trader, right? But not many will actually do it because they just lack the discipline to follow the rules that they know they need to follow, right? So if that's you, family, let's make that change today. And let's actually start getting you on pace and on track to getting the results that you're after, family. So I appreciate y'all. Thank you guys for rocking with me. Thank you guys for tuning in. If you were able to get some value from this video, guys, go ahead and drop one of your favorite nuggets right down in the comments below. And also make sure to be subscribed right to this channel with the post notifications on, because like I said, I am going to continue to drop a lot more videos to finish out the rest of this year, family. So I appreciate y'all. I love you guys. Thank you so much. And I'll see you guys in the next one. Let's get it.